Thank you very much. Good afternoon, everyone. It's great to see such a full house, full of enthusiastic and energetic people. I wanted to thank the organizing team for saving the best panel for last. And those of you who are still here are in for a treat. We've got quite an extraordinary group of people here, both active in investing in, supporting, and utilizing various aspects of generative AI and optimization in their practices. And we've got some, I don't want to say controversial questions, but we were going to have quite an excited dialogue here. So with that, let us kick it off. So Ulrika, please introduce yourself very briefly, just what you are working on these days, and then I've got some spicy questions for you.
Sure, Noah. So my name is Ulrike. I recently joined the CIO office of UBS. I'm responsible for global equities for the Global Wealth Management division of UBS. And prior to UBS, I was the senior portfolio manager at Partner at Tudor Investment and oversaw our global equities portfolio with a particular focus on data and AI.
That's great. So I imagine that you have quite a broad perspective from your seat within UBS on what is exciting in artificial intelligence and generative artificial intelligence. And I would love just to get your opinion from a global perspective. What do you see the most exciting opportunities in now, but also moving forward in 6, 12, 13, 18, 15 months?
Yeah, there are two ways you can invest into AI. You can invest into AI applications, or you can invest into AI infrastructure. And the one challenge I have with applications is that the speed of innovation in generative AI is just so enormous. It's truly breathtaking. And so the one thing when you develop or invest into applications, the one thing that you never know is this application that you're developing a feature of the next version of a larger foundational model. But what I do know is that no matter who wins, we'll need AI infrastructure. And there are many facets of AI infrastructure: data, clean data, properly labeled data, data infrastructure. But I think one thing that is most relevant right now is power, which is compute power, but also electricity. And I think maybe the latter one is that I mentioned that's still underappreciated. We have all heard about GPU shortages and inflection in the revenue of GPU companies last year that continues this year. But these GPUs are power hungry. They want about 5 times the amount of electricity than regular data center chips. So we're going to have, especially now in the context here of Dubai, an increased demand for energy over the next decade and more. And there's some projections out there that suggest that even within the next 4 years, the amount of electricity that we need to run these large-scale data centers for AI will increase by 15x. So I think that's an investing opportunity, especially if I think about Dubai and Dubai 2030. That seems extraordinarily compelling to position Dubai as a center for large language models and generative AI more broadly.
Yeah, and not just Dubai, but Abu Dhabi and the whole UAE, of course. There's a lot of money going into foundational models, into the infrastructural level, the chips. Some of the biggest checks that are being written in the investment space are in these core infrastructural elements. But you use the analogy of power and compute, both of which, if you look at the history of their valuations, whilst they might be massive companies, AWS representing a huge portion of Amazon's revenue, at the end of the day, the investment trajectory is for these foundational things to trend towards utility. So the valuation, whilst they might be objectively high, the actual growth rates are relatively slow. So I'm curious if you think that this pace of investment into foundational models, compute, the associated services like you mentioned, cleaning, data sources, et cetera, if you think we're going to continue to see the same kind of growth rate and the same kind of investment heat that we see there now.
Yeah, I think over time we will probably settle on just a few language models, large foundational models like 5 to 10. There will be obviously tons of smaller models. But I'm still asking myself, we haven't really seen the breakthrough application for generative AI. And maybe just one personal experience. So it was just, I think, not even 10 months ago, we did this Gen AI offsite with my team. And one day we dedicated purely to a hackathon to develop new Gen AI tools to enhance our investment process. And one idea was just to compare different regulatory filings. Have they changed materially from one quarter to the next? And the biggest limitation for us at that point was the size of the context window. You could only fit in 16,000 tokens. So you couldn't fit in, which is about 12,000 words, maybe 20, 25 pages, you couldn't fit in a 200-page document into the prompt of GPT-4, GPT 3.5 at the time. Now, a couple of days ago, Gemini Pro 1.5 was released, and it has, believe it or not, 1 million token context window. So within less than 10 months, this went up by a factor of 60x. And something that we created as an application back then suddenly has become a feature of this new model. So I think it's still challenging to think about which type of applications will be able to withstand that enormous amount of progress of these larger foundational models.
Let's come back to that, but it's actually a good segue to Naima. You lead the internal application of AI in the investment process within Mubadala, not the asset allocation, the allocation of capital, so don't ask for money. But I think it's an interesting example. I'd love to hear more about how you are thinking about applying AI in your investment process and what that looks like internally.
Yeah, so before I delve into the use cases we can leverage in investment processes, I just wanted to give a bit of feedback on how the investment community sees AI. And for us as investor, we aim at generating outperformance. So in this ever more complex and changing fast-paced environment, so we believe that the players who are proactive and come up with a clear strategy are there to benefit the most from AI. So in the way we see AI, there are different sort of groups. And the first one really focuses on the investment management and decision-making. And among some of the use cases, we see AI augment in deal sourcing, deal screening, due diligence, but also exit monitoring. And if I do a quick zoom on the exit monitoring, AI has the potential to really help identify the right time to exit and the right opportunity to exit based on the performance of the portfolio, but also based on market conditions. So definitely a myriad of use cases from this perspective. The other dimensions is around the portfolio management. And when it comes to the portfolio management level, there's also a bunch of use cases where AI could support and augment our activities. As investors, I mean, we look into macroeconomic signals, tracking these signals, analyzing these signals, but also firming investment trends and themes, also building our risk forecasting in a more sophisticated way. So AI has a critical role when it comes to these processes. And if I zoom on one of the processes, let's say the macroeconomic signals, I mean, we're all, as investors, we're all processing a myriad of data points. We're talking inflation, we're talking growth rates, interest rates, GDP, and AI has a tremendous potential when it comes to processing this vast amount of data and identifying hidden patterns. So it definitely has potential for us to build more data-driven macro scenarios. So these are some of the use cases we see AI really support the investment industry. And then on the last dimension, I would say there would be use cases that are more broader and sort of apply to cross industries and cross-functional. And so from this perspective, we see efficiency gains, productivity gains in tools like the Microsoft Copilots of this world that come up with functionalities to augment our employees in their day-to-day activities. So we are talking first draft, we're talking summarization, smart querying, so a whole myriad of use cases. So I think the conclusion is that there are a lot of use cases and every investor has to figure out what role they want AI to play in their organization and derive their priority use cases as a consequence of this strategy. So before I close, I just wanted to add one thing. So at Mubadala, we are a forward-thinking organization. So we think that we need to be proactive, but it's also very important to realize that AI comes with, like any other disruptive technology, it comes with a set of challenges and limitations. And it's very important for us to, so we really advocate for an adoption of AI that's gradual and that really takes into consideration the risks and the potential risk of that AI as a technology brings.
That's fascinating. Can you share like one or two lessons from, I know you're quite far along in your journey now with this, but it hasn't been rolled out. Can you share one or two lessons you've learned that the audience might benefit from in trying to apply this in such a large organization?
So I think one of the key learning is to nail your data. I think that, AI just feeds into data, and a lot of effort has to go into streamlining this data, really cleaning it and making it AI ready. And unless you have a proper data infrastructure in place, you have the right data management protocols, you will struggle with AI applications. So the output is going to be as good as what you're going to feed your models. So really putting effort on data is key here.
Yeah, makes total sense. We did a survey recently with about 400 of our corporate members, multinational family offices, investment groups, on how they're using AI in their business units and in the MENA region. And surprisingly, only about 25% of corporations are conducting experiments and tests in there. They're pursuing this wait-and-see approach. But what was interesting is when we did the survey of their employees, over 50% of their employees were already using generative AI, in particular ChatGPT, in their day-to-day work. So there's that interesting contrast there, and obviously that has very large implications when you're talking about deployment of capital. I'm going to shift the order up a little bit briefly. Patrick, I want to get a global view on, from you, but Ali, you mentioned earlier that you also have been doing some application around utilization of AI in the context of the investment landscape itself. Can you just share very briefly on that, and then we'll come back to it later?
No, absolutely. So what we've been working on, and kind of dips into what Nema was saying, right? There's a lot of kind of ambiguity in terms of how we're looking at measuring companies, both from an efficacy of valuations, especially when it comes across industry sectors. When you look at some of the greenfield sectors, how do you kind of use historical data? So one of our partnerships is a joint venture with Oxford University as an example, right? And what we've done there is we've cataloged historically a significant amount of information relating to different rounds, different sectors, companies that have been funded, that have been institutionalized, both from like a seed going up to even a seed C, seed D kind of a stage, right? The structured data helps us kind of categorize understanding, and we've also labeled them in terms of at what stage of an evolution that business was, right? So generative AI is not going to be at the same stage as it is today in terms of, say, hyper funding, and how do you then demarcate between the infrastructure play versus the applications play, and what's the evolution 3 years down the line. So that level of finer nuance are kind of getting into how you then evaluate businesses, or what do investors or analysts think is the right valuation for a company. So we're trying to democratize the way companies get valued and funded, so there is a lot more consistency. And we're obviously going to improvise that based on a significant amount of structured data that we're able to bring into the pipeline. So this will be a very high utilized application across the investing system globally, which is actually a research project that started in Oxford in 2015 as an example.
That's interesting. I mean, have you had results yet?
You got to join us for the panel tomorrow. We're doing a roundtable at 11 to talk about it. So this was my hard sell I'm doing in the session. But no, I don't want to take the cat away from the bag. But we'll talk a lot about this and more. So, but yeah, I think it's early days. That's the short answer. But the intent is not to have an early result and jump to a conclusion, right? It's almost like Google facing issues with their Gemini image model coming out too soon, right? And no pun intended. So I think the input is how do you keep working on it to eventually get it right?
Yeah. You know, I mean, the Google example is very interesting. We've seen the negative impacts that a poorly rolled out product can have on your stock price. But obviously, we've had algorithmic trading in something around 80% of the total global trades are algorithmic in nature, and that can have both spikes and crashes there. So there's a bit of a context in that. But I do think that as we enter more into the deployment of these tools in our investment decision making, we're probably in store for some surprises. Not least of which is I have a PhD, but I still barely understand LLMs. And I think even people who are working in the LLM space in terms of problems of explainability have challenges explaining that. So we're going to face some very interesting challenges where we're getting buy or sell recommendations for reasons that we might not actually comprehend, and then some poor sucker is going to have to be the one signing off on that with potentially surprising outcomes. But Patrick, you also sit in a very interesting position with quite a global perspective on how the landscape is evolving. And I'd love to get your impression on where you see things evolving over the next 12, 18 months, maybe 36 months in a long time, and what kind of surprises might we see?
First of all, innovation tends to come as a surprise. If someone told me they foresaw ChatGPT, they foresaw a Sora coming, I think that's probably is a lie. If you're really in the flow of developing products, you're actually going to be surprised by what you found in that whole process. For everything, especially when it comes to technology, is always work in process. I was actually in the US, I was talking to some of the political leaders, and I said, look, where we stand today, we have entered decisively from the human intelligence era to a digital intelligence era. We're already there. Think about each of us, how much of our processing power, computing power sits in our brain as opposed to in the digital world. It's probably 1 to 99. And it's quickly going to grow into 1 to 999, and that's exponential curve we're all going to live in. So AI is essentially just a leapfrog of the technology. But the implications, I'm talking about the applications, is going to be multifaceted. For example, in the world of wealth investment management, for a long time, I think people don't understand why, we should move to index fund. And active managers found it pretty hard to beat the index because in the US, for example, most people who are involved, every day's trading volume is done by institutional investors. So you got a really smart people kind of like competing against each other. For an amateurish person to get into that game is very, very difficult to do better than that. But even you're a smart institutional investor, it's very, very difficult for you to beat your peers. Essentially, what I'm trying to say is, even just in the world of investment management, we're going to see arms race. Everybody is going to upgrade their computing power and figuring out how to actually generate that little bit alpha from all these kind of trading algorithms. And so when people think about large language model, it's like in the past when we think about internet, the underlying technology and everything. And for most of us, that's actually not something we have to spend a lot of time thinking about, is how actually this thing is going to manifest in the real world. And when I look at, for example, the AI community, that's about 1/3. I'm talking about talents now. They sit in the US, 1/3 in China, and 1/3 in Europe. Even you look at OpenAI team, it's about 1/3 of the team, they came from China. So the world is kind of like pretty much mingled and mixed, and they're trying to do interesting stuff. I think American AI companies are extremely good at, certainly with the foundation models, but also all these kind of interesting applications in the virtual world. Then if you look at the Chinese side, for example, and they're doing something really, really interesting in the physical world. For example, you look at this wave of EV, right, and a wave and electric vehicle, and they started to put robots on the production line. And we hear so much about Optimus and how much they're doing with Tesla, but also there's some interesting approach and undergoing on the production lines in China. So you can see this as a competition, but I would just say it's like 1,000 flowers bloom, right? With the foundation model started to and evolve into the next phase. So I'm quite excited about this. But on the other hand, people needed to be a little bit cognizant that we might actually have some hiccups coming. And I think people, and if you look at the stock of NVIDIA, it's certainly priced in for a lot of enthusiasm. And the next month, in the next quarter, I think they projected to have a $24 billion of revenue. So the run rate is about $110 billion of revenue. That's actually the capex from everybody else. And number one, who are spending on this, they're the ones, they have a cloud, so they spend a lot of money. But that money is capitalized. So people basically, it's the demand put forward. And how likely that's going to be sustainable? That's number one question. Number two question is, if you're actually, from GPU side, the amount of money people are going to spend on this is going to be $110 billion for this year. How much value we suppose as investors to create out of this? Maybe $1 trillion. So that's the ROI we have to be thinking about. Will we actually realize that in a short period of time? Or that's going to be realized for a longer period? Because I think for investors, we needed to understand the terminal value for everything. And I think that's an exercise a lot of people haven't done so much about. AI will stay. It's going to be the most important technology driver and for the next wave. But I think people needed to be also cognizant. There might be some hiccups coming. But I'm a big believer what AI is going to help us. You look at the GDP, essentially there are two components. One is working hours. The other one is productivity. AI has arrived timely to help us, hopefully, on the productivity side. I think if you look at the economy around the world, it's actually, other than the US right now, it's not doing very well. So what's going to take us out of this mess? I think AI is going to play such a pivotal role.
That's a great point. I mean, also, if you disaggregate the stock market performance in the US, exclusive of the top 7 high-growth stocks, which are almost all tech stocks, the market has been flat over the last several years. So to your point, there are some larger hiccups. So please, Ulrike,
No, but just to your question on the terminal value, maybe one way to look at it is to think about what was the productivity growth from the PC and the internet era. And that's about 35%. And I think AI legitimately could be larger than that. But even if we just say it's going to be as big as PC and the internet, you can do some math around knowledge worker salaries and productivity increases that leads you to about 10 trillion in value generation over time, say over the next 10 years or so. But again, we may still underestimate the actual productivity boost. I like this quote by Andreessen Horowitz, the US venture capital firm, that what is the size of the AI market? It's somewhere between the value of all software and the value of all human endeavors. So maybe 10 trillion is the lower bar.
Yeah, so I'm just talking about the timing of it.
Yeah.
I mean, I am a big believer for the long-term potential of everything we discussed today.
And I think that's a key point, and I'd love to hear from all of you on the panel on this. Let's just say, for the sake of controversy, that the foundational stocks, like NVIDIA, for example, one of the hottest stocks, one of the hottest companies in the world right now, Microsoft just announced investment in Mistral. We've got OpenAI. Apple's pursuing their LLM investments. What if all of these are overestimated their value in the short term? And the thesis behind that is that, as you guys have all clearly articulated, there's a lot of competition in this space. Open source models are getting better and better and better. And just like if you look at the history of the internet as well, the infrastructural layer, whilst it experienced very, very high growth, is not where the real value was created in the long run. Does this make any sense at all?
Well, listen, I mean, there are two things we're talking about. If you wear the hat as investor, my advice is to just don't carry it away. But if you're a technologist, you're an entrepreneur, this is like a biggest opportunity. It's not just for this generation, for many generations, this is really huge. You got to spend a lot of time on this. And by the way, then you also have VR, ARs happening,
Absolutely.
And you also have robotics happening. Robotics isn't just replace us. it's going to fundamentally change the margin structure of the auto industry. Because look, you cannot raise the price, it's all about cost. And if you're able to bring in the robots and start to do some of the work, and you're going to realize a lot of profit as a result of that. And certainly there is another game theory, people are going to have a lot of competition, but fundamentally I think this AI thing, this robotics thing, will change profit margin structure for a lot of businesses.
Absolutely, but to extend the analogy...
I've got a point. So I think in this case, when you think about like the 7, 10 kind of big tech stock, right? Open source models is not going to be able to replicate licensed training data. Eventually, open source is based on what they have is open data, but when you look at finite applications, and you are not even seeing, you're not scratching the surface as far as finite applications are concerned. So I still feel that the large tech have a significant kind of leverage within the business purely because of their distribution. There is another aspect of developing more finite, accurate models, because eventually we deal with industry where we don't need generic solutions, we need accurate solutions. And that's where the hordes of trillions of licensed training data is going to play into their hands, right? Like, even though like Gemini comes about a year later than OpenAI, they can catch up because of the significant hordes of data an organization like Google has, as an example, right? Now, the question you're going to ask, what we're not talking about today is industry went from public cloud to private cloud to hybrid. How does that play a role? Because sovereign data, financial data, health data can't exist on public cloud. And if it's on public cloud, who has access to it? What are components of ethical AI, and how does that feed into the cost structure? And one of the most important things is NVIDIA is almost playing a monopolistic role. They wouldn't like me to say that publicly, but they are. What happens when Google develops their own chips, Microsoft announces their AI servers, Intel and AMD are not going to sit far behind, right? So what happens when they start coming to the forefront? Would NVIDIA be able to start charge the same margins that they are today? So the cost parameters will come down, and it's a leveler playing field, but I still feel that big tech has a significant leverage. It's their game to lose, and it's possible that they might lose it. There will be new entrants to the market, but I don't think it's easy to dispel, unless you're like Apple and you don't get this right and you just focus on the iPhone for the next 10 years. There are ways and means to ensure you stay successful in the business.
But this gets us into the application layer that you were talking about earlier. I mean, Tesla's value is not in its lithium production line, it's in the integration of that into a service and a product that people want and are willing to pay a premium price for. So I'm curious, sort of, where do you see the application value over the next 3 to 5 years? Obviously, we'll have the infrastructural stuff still growing essentially, but where do you see the most exciting opportunities in the application space going forward?
Yeah, I'm probably still a little bit more biased to the infrastructure layer, and I'm not so sure. I think there is this seeming consensus out there right now that, these large language models will get commoditized. We heard it multiple times. But if you look at the Hugging Face leaderboard, what is striking is that GPT-4 is still in the top position. Despite Gemini having been released, despite Mistral, despite there are so many open source models that have been developed, yet GPT-4 stays in the leading spot. And I think one of the reasons is that they also profit so much from usage. Because most of these models are developed in vitro, right, with data, but the feedback, you have to label the data, and then you have to generate human feedback. As these models are being used, these interactions are highly valuable to train these models to become better and better. So there is this exponential nature of these large language models that I think is still underappreciated.
I agree.
Right.
I think like one of the largest industries, and I'm biased when I say this, where these applications are, it's kind of what OpenAI is trying to do with Sora. The entertainment industry is going to drastically change, right? It's an interesting article I was reading a couple of days ago. The creator ecosystem, everybody is a creator, right? Like, think about that for a second. When YouTube started, they had like 1 million creators. I think they have about 30 million creators today. If everybody becomes a creator with a lot of these Adobe Firefly and Sora kind of tools, what happens to the creator ecosystem? Like, who's the consumer and who's the creator? So I think the entertainment ecosystem changes drastically. I think the article said, should Netflix be threatened in terms of capability of development of content? I think that future is a little far away, but it's definitely going to come. The second sector I'm personally very excited about is education, right? So when you talk about access to academia, or even somebody like me wants to learn a particular course, or education in countries like Africa or parts of South Asia where kids don't get access to proper schooling, what happens to the next generation when you're able to provide a similar capability or threshold of academia as the top students get in the US or in Europe or in the Middle East to these students? Would they eventually become smarter, better because they're hungrier to learn, right? So I think that access to education through commoditizing education, generative AI is going to play a massive role in terms of how it flips the economy.
Great. So closing comments, last second. What are you most excited by in the next few years, and what surprises do you think we are likely to see?
Okay, so what I'll address, though, is what I think would be a great leap forward for the industry. A great leap forward when it comes to investment would be when AI consistently beats the market and the investment community. But where we stand, I think we're not just yet there. And especially when it comes to diversify portfolio, private market. So that would be the absolute, I say, leap forward.
We've seen some examples of this as well already. Patrick, I'll give you the closing words. What kind of surprises are we likely to see, and what are you most excited by?
So I was just in Africa with my family during Chinese New Year. And look, I mean, we started with a large language model, then we moved to Sora. Sora is like, okay, start to understand the physics. And when I was in the jungle, I started to pay attention to the animals, to the forest. And so I think biology is going to be one such a cool area that's going to give scientists a lot of innovations, a lot of inspirations for ideas. I think that's going to continue to surprise us in a very large way.
Large life models. You heard it here first, guys. Great. Well, thank you all for your time. Please join me in a round of applause for our panelists. And have a good evening. Thank you.